Hello and welcome to another update video about XRP. Here for XRP we have dropped below this ascending trend line. I think it was the right decision to be a bit skeptical about this price increase of XRP. There is currently no evidence that this is something more bullish than just a corrective move to the upside, but in this video I'll show you my latest view and assumptions about the XRP chart, important levels, pivot points, and also a bullish scenario, which I don't have too much confidence in, but it is still there and is possible. So first of all, this is here still the primary scenario where we still generally expect higher prices for XRP. Yeah, all I had to do was to reset the wave, here the wave C a little bit lower, and when that is done, as wave B, yeah, so before I had a triangle here, but we failed to break above the wave A high, so we failed to break above that 55.7 cent level, ultimately broke down, lost the trend line, and it is still possible though to have this as wave B, so basically A, B, and then the wave C to the upside. That would be a 5-wave move to the upside, and based on the latest low here, we can also take a look at what that would mean in terms of targets, yeah, for the next high. No, I need to take the Fibonacci extension tool for that. And yeah, that might take us all the way up, actually, with the latest price development to nearly or to around 79 cents. So that would be quite a bit of a move here in this wave C of Y, and it would be a 5-wave move. The reason why I'm suggesting this is because from the low here, the wave C low at 43.7 cents, we had an impulsive move to the upside. So it's a 5-wave move on the lower time frame. That suggests that we could really be moving to the upside now, here short term, and that also suggests that we have a truncated zigzag pattern here, basically, or truncated flat, basically. Yeah, so that in this wave C, yeah, we do not make, as we normally would, that we would make a lower low. Yeah, we didn't, a lower low than the wave A. So it's a truncated corrective pattern, out of which we can certainly break to the upside. You can draw this even as maybe even a larger triangle. So this is possible. So this could even evolve into something much longer. So we could very well in this channel still bounce up and down a little bit. That is of course what we don't know yet. Breakout to the upside for me would be confirmed above the wave B high, which is here at 54.7 cents, and then we need to take the 55.8 cent level, and I think that we can make it to these targets up here that I mentioned, and the 79 cent level would be the minimum for that. All right. On the flip side, if we drop below the low of here the wave, what I have as wave A, yeah, so if we go below the 41.7 cent level, then I think we could go lower. Next support would be around 38.1 cent, and if we go below this level, well, then we're really looking at here 28 cent and lower. Yeah. So for me at the moment, there's a good chance we're holding this swing low at 43.8 cents, as this is an impulsive move up. But as you can see here, we got rejected, at least for now, short term, at this ascending trend line. So there is also a short-term breakout point that is highly relevant, and I will show you that one as well and why it is relevant. So again, based on the Fibonacci, based on the Elliott Wave method, yeah, we can count here this wave C down as a 5-wave move, as you would normally in a wave C. And then here again, wave 4 is a triangle. That's also how you can always identify these wave counts easier. And first of all, when I look at a structure like that, I'm looking at the strongest move. That is here, this one. That is most likely a wave 3. And then you have this sort of sideways range just after that, which is then most likely a wave 4. When you get a bit of practice, you can pick these things up straight away. Elliott Wave triangle, yeah, good chance that this was a triangle in a wave 4. A wave 4 is often a triangle, and then here the wave 5 down. What is important to understand is that if we now break above this wave 4 high, then there's a really good chance we break up to the upside and get to that wave B high at 54.8 cents. And the breakout level here, very short-term breakout level, would be 49 cents. That's the wave 4 high. That is where the triangle ended. All right. Now this is sort of the short-term bullish scenario where we would move up higher, but then eventually we would come down. So I currently don't see this yet as a bullish breakout. It could be one, and I acknowledge that the possibility exists, and we can very well also look at this from a bullish point of view, in which we would say that so we have a few 1-2 setups down here, but the most recent one, or the most, let's say the most relevant one, is no, it's not this one. Take that out. So we would say that we started an impulse from here in a wave 1, we came down in a wave 2 here, and we are now moving up in wave 3. But target for that, we get to that in a minute, target for the bullish scenario here would be, and this would be very bullish actually, because it's a series of 1-2 setups. Target here would be, oh dear, I need to take the other fibs out, otherwise I get confused myself. So yeah, that would take us also to around about 76 cents. Okay, so in both the, let's say the bearish but short-term bullish scenario and the bullish scenario would move up into the region around 76, 79 cents, you know. But important for this is that we are holding the swing low here at round, so the wave, what I have labeled here as wave A low or wave 2 low, depending on which scenario we look at. So we need to hold the 41 and 41.7 cent level. Yeah. Now if we don't, then we can always reset the wave 2 here, and then we have a B, C in a wave 2, and then we have still another chance to move up, as long as we're holding the 38 cent level, which is this swing low here from the 21st of September. So what all of that means really is that, honestly, as long as we're holding, I think, I mean, short term here 41.5 cents, but really the 38 cent level, as long as we're holding that, I think we can focus on higher, short term at least. But it is a bit of an unclear pattern. Yeah, I don't trust the bullish pattern, because in this whole mess here that we had since June, you have, first of all, very unclear 1-2 setups, but a series of 1-2 setups, and we have 4. And if you have 4 1-2 setups, it's always quite unlikely that it's working out. So yeah, I've got it therefore primarily as this, let's say, bearish pattern, but short-term bullish. But even in the short-term bullish pattern, we can go up as long as we're holding this 41.5 and then also 38 cent level. But we need signals. Yeah, we want to see the breakout above 49 cents and then the 55.8 cent level, and then we can get into that region around 76, 79 to 80 cents. So that's my best view of the XRP chart at the moment. I mean, one final look maybe here on the indicators. The RSI, I mean, that is also why we bounced to the upside here today a little bit. When we hit support here on this trend line, we were just oversold it like many other cryptos were. But as you can see here on the 4-hour RSI, we're definitely not exhausted to the upside yet. So this can push higher. Even on the 1 hour, it could push a bit higher, and we could possibly break out of this trend line here to the upside that we have on the chart. The daily chart still pushing further down, yeah, and that is definitely not a bullish signal. The daily MACD, so the momentum is pushing down, so that just indicates my view that we are not clearly in a bullish pattern here, even though short-term bullishness and a short-term breakout to the upside is definitely possible. But there are clearer charts from my point of view, because this could also, as long as we are in the range here, very well extend out to an Elliott Wave triangle before we move up. Okay, and that's my update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.